The consequences of NIO's Q1 of 2025 earnings report is that the management is finally waking up. They are taking huge steps towards profitability by Q4 of this year. One of the steps are reducing the operating expenses, mainly from improving research and development, combining the R&D teams across the multiple brands, reducing the SG&A cost, but also having a target to reduce the R&D expense from essentially 500 million or so on a quarterly basis to hopefully 300 to 350 million on a quarterly basis. That's roughly 600 to 700 million savings on annual run rate. In addition to that, the SG&A, we saw that kind of came down a little bit compared to the previous quarter. Now remember, don't be fooled by the fact that, the number of calls sold in the past quarter compared to the previous quarter essentially went down by 40-50%. So it's realistic that also the SG&A goes down. Let's see if they manage to do that in the next quarter, in Q2, because in Q2 we're going to expect 75 to 76,000 deliveries. Let's see if the SG&A is going to be around 600 million and not go up to 650 or 700. If they do that, then again we are in the same classical scenario with NIO, where the management talks the talk but never walks the walk. So before we look at the future, let's look at the actual numbers that came in. So the revenue came in at 1.68 1.65 billion US dollar. My target was closer to 1.7, but still in the same ballpark. We can see that the cost of sales was roughly similar for me. Again, the actuals are in the middle and my expected target was roughly in to the left there. We can see that the gross profit, I expected a little bit more, but they came in at 126 million. The operating expenses just around 1 billion. This is very good actually, operating expenses, because they went down from 1.15 billion in the last quarter. So I very much like that kind of improvement. Going down 60 million or so in a single quarter is one step in the right direction. You argue that is it a little bit too late? Because, well, in my opinion, it's very late. Like, remember that by this time, in order to be here, they all already diluted the shareholders so many times. There's a reason that the stock price is down yet again. Year to date, what? We are down 17% year to date. And if in 1 year, if we are down 30%, and compared to the peaks of the past 3 or 4 years, we are down 80%, 70%. I don't know. It's like a humongous amount of down. But yeah, so I would say that you're doing this a little bit too late. There's also sadly this discussion, NIO in talks with potential buyers to sell stake in key assets, reports say. And as you scroll down, you can see that the interested parties are CATL, for example, to look at the increase to a controlling stake in NIO Power, the battery swaps and so on. And looking at the comment here, I think this is very interesting. This gentleman here said, just sell the entire battery business to CATL. That will relieve them of the baggage of the battery swaps. I agree with that consensus now. But what the problematic issue with this comment is that if the management would have the foresight, if they actually, cared, and if they reduce the amount of, R&D expensive, the amount of models, the amount of sub brands, like 1 year, 2 years ago, they wouldn't be in this position needing to even discuss selling off the power swap stations. Remember, the whole point of NIO was to invest in a company, in an electric vehicle company that was different than the others. We invested in NIO because of the battery swap infrastructure. So now you are telling me that we are in a scenario that they potentially gonna sell off a significant amount of the entire idea behind NIO in order to survive. And was this, unavoidable? And the simple answer is absolutely yes. The management truly messed this up, right? It's not a case like, they didn't have a good foresight in this. They could easily a year ago, 2 years ago, cut down on a few models. They are selling what? They have 12 to 15 models. And how many cars did they sell last month? So let's have a look. We can see here that in 2025, the table up there, or maybe it's better for you to see in the graph. The 2025 numbers are in the white or in the gray. The blue is last year and the green is 2023. So in May or April of this year, they sold around 24 to 23,000 cars. On 12 to 14 different models. On average, that's a little bit more than 1,000 cars on each model, right? So let's look at one of the main competitors, obviously Tesla, right? And week 22, which is the last few days of May and the first day of June, Tesla sold 13,000 cars. And What kind of brands, or sorry, what kind of models are Tesla selling in China? These are the Chinese insurance registration numbers. Well, they are saying essentially Model 3s and Model Ys. So you're telling me Tesla sold essentially on average 6 to 7,000 cars on each, whereas NIO is selling like 1,000 cars. This is where efficiency comes into the picture. The reason why NIO is making such a huge losses is because they're having so humongous amount of different models. So they're selling on average 1,000 or so per car. And that is why they have been making like essentially billion or so net loss every single quarter quite a long time. At least maybe not every single one was billion, but at least 6, 7, 800 million on a single quarter losses, right? Despite the actual vehicle deliveries going up, like look at this. They went from, I mean, I can show you in the graph, maybe it's easier. Look at the deliveries from Q1 of 2021. I mean, there's been a little bit of up and downs, but on average, they've been way up. I mean, now they're projecting 76,000, probably 100,000 cars on a quarterly basis just in a few months. So this is why I'm a little bit, sad about the management and the lack of foresight. Like, how could they not seen this coming? It's good that they're finally seeing the light. I mean, I love the fact that they are reducing the R&D investment substantially. I mean, they're talking about like cutting the research and development spending by 25%. Again, this is perfect. This is one step in the right direction. But what I'm also arguing on coming from is that this is way too late. They could have saved so much money. They could have saved so much dilution, so much of the stock price going down year in, year out over the past, couple of 4 years. I mean, look at this. How many times over this past 4 years haven't you seen on Twitter someone like making a technical analysis, like in 2022 when the stock went from like 60 to, I don't know, let's say 20, already like 60% down, right? How many times throughout those years haven't you seen someone making a technical analysis? Oh, the bottom is in, we're gonna go up. And we had the moment in 2023, I think, when the stock went to 15 or 16. And just as everything started to look great, they diluted again, right? Remember that? So this is the problem with this management. Like, they are doing too much. The art of this business is to not doing too much. Like, I think a lot of you invested in NIO because of the battery swap infrastructure. And now you are telling me that you want to sell off one of the key assets of the company because you couldn't see the fact that, I mean, a lot of us couch investors, like, we are not experts. Let's be honest, I'm not an expert. I'm just saying what I feel and what I think. So I, as an amateur, could see this coming together with a lot of you out there. But this management, and let's be honest, they need to get a lot of criticism. There is some high degree of incompetency on this. The fact that they are even thinking, like, again, let's be honest with yourself. The fact that they're even thinking about doing this shows how incompetent they have been over the past 3 or 4 years. They could, at any given time, at any moment in these past 3 or 4 years, they could have easily reduced the amount of cars. Maybe didn't invest in Onvo or I don't know, Firefly, or at least, have, if you want to go with the route of having Onvo and Firefly, why do you need like so many different variants of the main brand, right? If they are not selling enough cars. So they could easily save this situation. On the good positive note, we can see that the lithium carbonate price still goes down. So that's good to see. This is going to help NIO quite a lot across also with other companies out there. We can see that the guideline, the outlook for the Q2 is 72 to 75,000 cars. I think this is realistic. Now, on the positive note, if you look at my modeling, right, if you go now with the facts that we have, I told you that the only way NIO could become profitable would be if they reduce their operating expenses. And it seems that they are actually doing this. So let's be, frank, let's give them credit that they are actually implementing this step. And don't like fool yourself. Remember, this is the only way they can survive as a company, to cut the operating expenses by a significant amount. They are doing that. They reduce the R&D by 60 million. They are talking about going to 350 million by end of the year. Maybe the SG&A. This is, I think, I trust them on R&D. I think they wouldn't lie to us. Like, if they say they're gonna reduce the R&D, they're gonna do that. But will they be able to reduce the SG&A? Like, it's a target that they have, but maybe they are not going to be able to do that. I mean, maybe they need more salespeople to sell more cars. I mean, that's not unrealistic, especially knowing NIO's history, that every time they needed to sell more cars, they needed more sales force, right? Now they are talking about some efficiencies, but again, we don't know. That's not a fact. That's something that they are saying. And if there's one company that you absolutely shouldn't trust, the management is the NIO company management. That's the honest fact. Like, this is what it's their own fault. They have made this situation this tricky, but let's see if this is gonna improve. I think we are seeing a little bit of an improvement. Look at the, for example, the sales will go to 100,000 to 110,000 in Q4 roughly, which is like 35,000 monthly deliveries. I think that's doable. My own target for June is 28,000. I think by July and August we're gonna get well above 30,000 due to the new model years update, and maybe we're gonna see the L80 and just Firefly ramping up a little bit more. So I would say 30 to 35,000 deliveries on a monthly basis leads us to a position where NIO will have 100 to 110,000 sales on a quarterly basis. That pushed them to revenues of 3.3 to 3.7 billion by Q3 and Q4. I expect the cost of sales to be somewhat controlled, which leads us to a gross profit of around $500 million in Q3, 650 million in Q4. The total operating expenses has kind of going down in my modeling now due to the fact that they are talking about reducing operating expenses. We are going to be below 1 billion again, which is really good. And with operating expenses less than 1 billion and gross profit at 650 million, we're going to be around a net loss of around 250 million, which is, I would say, good, because at that moment in time, they would have a cash position around 2 billion. And if they're making net losses at around 200 million on a quarterly basis, that's 10 quarters of run rate. Of course, they need more money, because you cannot just run the business with zero money in the bank, right? So you need to have somewhat of a reserve. So you cannot just run, on 500 billion cash, so 500 million cash. So this is an optimistic view yet again, but at least they are moving in the right direction. The good news is that I haven't updated my 2026, but I think like if they get 120,000 to 130,000, they will be profitable with the new updated numbers due to the reduced operating expenses. I think NIO will be profitable with 130,000 cars within a year's time. So that's the good news. Finally, maybe we are actually for once having a little bit of a, let's say, positive news coming. I think the market will see this, and I could see if this continues in this path, I would say this company's stock price is way too cheap. But again, it's a little bit too early. Let's wait until Q2. I would say one thing that NIO management could do to surprise the market, they always postpone their earnings report and have them so late in the quarter when they know that the vehicle deliveries are low. So this quarter they just sat on the 3rd of June, which is like, what? Q1 ended in the 31st of March, right? And they have the earnings report 2 months later. But we knew that because they wanted to postpone it. So they have good foresight of Q2 delivery numbers. And when they knew the Q2 would be probably a record number, then they could then have their Q1 earnings. Now, we know already Q2 is going to be good. Probably Q3 is also going to be good. So what I would do if I was NIO management, as soon as the Q2 quarter is done, I would have my earnings report like as soon as possible, like within a month, as most of the serious companies, like, the likes of Google, AMD, or any other serious company, right? Have them within 4 weeks to surprise the market and show that you're aggressive and you're meaning business. But the main problem for me now is, will they be able to control their sales? Like, will they ramp up in sales without increasing the SG&A? That's the big question. But half of the problem is solved since the fact that they are reducing the R&D expenses. And then there's also a little bit of other discussions, like for example, NIO and Onvo having targets of selling 25,000 cars by Q4 on a monthly basis. Let's see if they can fulfill that. If they do that, they will by far be profitable. We can also again discuss about let's not forget the fact that the swap infrastructure still are like way too low utilized. So part of the reason why the company is now considering to sell a big chunk of the NIO Energy business is the fact that they didn't have the foresight. They invested so humongous amount of hundreds of millions, probably billions into the swap infrastructure when the utilization was insanely low in relation to the current max capacity. Again, they're averaging 24 swaps per station per day. The newest stations are in the hundreds, they can handle hundreds, 200 to 400 swaps per day. So they're not even at 10% utilization rate. And this management decided to put a lot of money into expanding this already like not utilized swap infrastructure, risking the company's future, and now ending up in a position that they might actually need to sell a big chunk of the battery swap infrastructure. I mean, you cannot make this up. This is incompetency at the highest levels. But in any case, at least there's some positives coming. So that was the update from the Q1 earnings report. I think we might be past the worst part of NIO, actually. I don't know, but again, it's a very risky business, and if there's one company that can surprise on the negative side, it's obviously NIO with William Lee. So anyways, thanks for your time. Please like and comment, and see you in the next one.